Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome, everyone. This is Elenit Levine from the ISE. I actually work very closely with Steve Meisinger, our Director of Education, in putting together the FX Options webinar series. We have a very special guest today. We have John Person as our guest speaker. He's going to be talking about trading strategies in today's volatile markets. So we really wanted to thank you for joining us, especially on such an important day, it being Election Day, and taking the time to join us. Just to give you a little bit of background, John is a 28-year veteran of the futures and options trading industry. He started on the floor of the Chicago Mercantile Exchange back in 1979. He is the former owner and president of the First National Futures Group. John has shared his wealth of knowledge in the field of technical analysis, his trading style, and system development, and he's taught thousands of traders, including members of the largest exchanges. He's also the author of 3 internationally acclaimed trading books, as well as 2 trading courses and a DVD seminar series. He's also widely quoted by CBS, MarketWatch, Reuters, Dow Jones, Newswire, and regularly appears on CNBC. So just wanted to also give you a heads up that he's going to be speaking at the upcoming Traders Expo in Las Vegas, which is November 19th through the 22nd. And he's going to be on one of the breakout panel sessions on Friday, November 21st at 3:30 p.m. So if you're going to happen to be there, it would be great if you can drop in. So I'm just going to turn the reins over to John, and we're going to get started. Thank you.
Elena, thank you very much. Everyone, it's great to be here on, as Elena mentioned, an important day, election 2008. What wild volatility we've seen in these markets. And if I could just get a sound check, a Y, make sure everyone can hear me. And if we have the presentation ready to go. I got one Y. Sounds great. Excellent. Today in the Forex markets and dealing with all the markets, whether it's equities, whether it's commodities, commodity-led stocks, or when I say commodity-led stocks, we look at a lot of commodities such as crude oil, gold. We look at other precious metals, silver, copper, and industrial metal. There's so many different ways to trade these markets, and what's interesting is in foreign currencies, trading with, at least if you're an equities trader, taking advantage of this volatility, it can be a two-edged sword. Because of increased volatility, markets are moving. But if you're not on the right side of the market, it can be very costly. I did a presentation on behalf of the ISE back in August, and I'm going to have a follow-up with that because some of the information I'm going to give you today is not only is it pertinent then, but it's more powerful and pertinent right now as we're giving this presentation. Most people are looking at the micro or the smaller term time frames and situations and scenarios. And a lot of traders get wrapped up in what the media is reporting about. And the funny thing is by the time it hits the media in my small 30-year span career, the move's generally factored in, priced in, or it's over, or more importantly, we don't have all the details. I'd like to share with you a kind of just to give you an indication about what's driving volatility, most people were blaming speculators, and I'm sure you've heard that speculators and the CFTC was investigating, and this was a worrisome situation earlier this year as we saw crude oil get driven straight up to 150, and of course with the euro currency and the plummeting dollar and the effect it had on the foreign currencies, which we're going to get into in just a minute. But what was interesting is that as of about 2 weeks ago, a small little article on the back section of the business area on Tuesday, I think it was the 23rd, if I'm not mistaken, of October. I have to find the article myself. But I think it was Tuesday the 23rd of October. The Financial Times, if anyone's familiar with the Financial Times reported that a hedge fund or an investment company, CITIC, C-I-T-I-C, reportedly CITIC is a arm of the Chinese government. It's a Chinese government-led investment conglomerate. CITIC is the name of the investment conglomerate. They were reportedly long euro currencies in a quote-unquote unauthorized position from about 144 long euro short U.S. dollar, and also reportedly they were in a long Aussie short U.S. dollar position from approximately 85. But just the euro currency as of around the 21st to 22nd of October was already amassing a loss of over $2 billion. Now, when that news was released, obviously we've seen it continue plunge in the euro currency. It really was accelerated, or the downside move was overly magnified. Why I bring this up to you right now is because it is obvious that it is no longer just speculators in the markets. And it's not just speculators here in the U.S., but it's speculators and hedgers and professional traders here, abroad, and it is obviously extended now into even governments, especially a country like China, trading in the marketplace in the Forex arena. So that's got to tell you something. If you're having a difficult time, or if you've seen some really wild moves, more than you've ever seen, folks, in my 30-year career, do not recall governments actually trading and taking speculative positions in the Forex or any market for that matter. So I'd like to say, if you feel that the world is against you, or that the markets are very tough because of undue volatility, to some degree you're right. And the key is finding out what methodology or what type of trading tools you can use to help you on the winning side. Now, if it is true that CITIC is an arm of the Chinese government, I feel sorry for the traders who were the unauthorized people placing those trades. But in all honesty, it's hard to hide a $2 billion loss from the Chinese government when you work for them. So I think there may have been some more to this story than we'll probably ever find out. The bottom line is, by the time we all find out information, it's generally too late, and we need to look ahead. And, you know, looking ahead is hard to do when you're in the passion of the battle, so to speak. And that's why I would like to review what we kind of talked about in the last presentation, because it was very important, and I think you'll find it very relevant now, next week, next month, next year. So we want to make sure that if you are taking notes, great. I believe this is being recorded. I would certainly go back and review the last presentation I did back in August. We talked about how we can micromanage position trades, how we use specific, or I use specific tools, namely pivot point analysis, and I'm going to go through a little bit of review of that with you in today's session. But most importantly, we went over the seasonality of the marketplace. Elaine had mentioned that I've been widely quoted in a lot of media. In fact, in this week's Barron's, if you get Barron's in the Commodity Corner section, there was an article there about and trying to make a case for deflation. And I was commenting and quoted in Barron's this week how I did not believe there is a deflationary story still.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.